It's Trading Tip Tuesday here at Brave New Coin. I wanted to talk about how to spot oversold, overbought conditions in various different ways to quantify that, fundamentals, technicals, the verbiage and terminology to use, and things to watch for. So one of the things that a lot of people talk about frequently is a crowded trade. That just means there's too many people on one side of the long or short sentiment. There's an imbalance. You can think of it as a pending long squeeze or a pending short squeeze. All of these type of terminologies are frequently used, and you can look for this. You can look at it directly through open interest, or you can look at things like surveys and polls. This was one done by Bank of America. It looks like they do it every month. I don't have the most recent data, but previously it was long Bitcoin by a pretty wide margin. Now long commodities is creeping up there for most people in most people's minds. So markets are people, and it's all about a confidence game. It's about social dynamics and relative values in the real world, basically. And, we can look at this again by looking at open interest. We can go to something like bybt.com. Historically, 1 billion, I think, on BitMEX was the big level to watch, because at that point in time, it becomes more worth it to liquidate positions than to actually push positions higher. So it hits a break point where there's this imbalance, where there's so many people who are on one side of a trade, or so many people vulnerable to liquidation, something else to pay attention to, which is why something like whale calls is such a big deal. When you see liquidations streaming in, when you see open interest get culled significantly, like we did March 2020, like we did most recently in DeFi May 18th, when you see stuff like that, it just means that at that point in time, it's harder to continue that trend because a significant amount of open interest has gotten culled. So it starts to get more and more oversold. That doesn't mean it's necessarily going to bottom. Doesn't mean it necessarily won't even keep going, right? But the ripeness of that squeeze dissipates significantly. So you can look at open interest, you can look at funding rates, which are another thing people pay attention to. If there's an imbalance in long or shorts, then you'll see a rise in longs paying shorts, shorts paying longs. It becomes less tolerable to be long. It's another way to look at oversold, overbought. If rates continue to rise on borrowing, basically, then you're making less on less on the long side. You're paying more and more. Becomes less convincing to long that position. These will fluctuate dramatically over any given time on any given exchange for any given reason. So it's important to know what you're looking at on the various exchanges. And on BitMEX, for example, funding rates for ETH and the initial listing were incredibly negative all the way down, right? All the way down to the lows. They were basically negative, and that was more a function of how BitMEX works and how funding rates are calculated there than people necessarily having an imbalance and being long on that particular exchange. So that's all nuanced stuff, but just pulling up these funding rates, I'm thinking, okay, we look kind of slightly overbought here, right? All these funding rates are positive, leaning higher positive, and open interest has creeped up now to a multi-month high since May 18th, right? Post May 18th high. And again, it's important to consider, it doesn't mean it's going to be the top. It doesn't mean we should just switch our mindset and trend's going to reverse immediately and I should go all in short because I think this is getting overbought, right? That's not what this is about. It's a sliding scale. It's extremely nuanced and very subjective, which gets people into a lot of trouble. We have certain traders who love to short every pop up and long every stab down and are perpetually incorrect. And that goes back to the social dynamics. If you're in a bubble, if you're in a group of traders that you talk to on Telegram or Signal or Discord, it's important to know who those people are, how they trade, and the psychology behind what they're saying. If you're in a group of people, try to get to know them and how they trade. You can use that as a signal. You can use that as an overbought, oversold signal. Is everybody in the group in agreement on certain things? How did that look previously when we were at a bottom or top, right? What is the backtesting for the group? Has the group been holding a high hit rate, or are people all over the place? Has this individual always been wrong and all of a sudden they're super bullish, right? These are important things to pay attention to that we pay attention to innately, but if you're unaware of it, it's important to point it out. So open interest funding liquidations, again, if we get like, multiple millions in liquidations, it's harder to continually liquidate that amount of open interest or volume. Sure, we got this like echo liquidation spike on the second leg down, but much like RSI divergences, on the lower low, we saw a smaller liquidation spike. If you continue to see liquidation spikes or open interest drop significantly on lower lows, then you can say, okay, probability is we haven't bottomed yet. There isn't a divergence here. There's still much more to go. And this is a way to sort of quantify it. It's just hard to, even on the OKEX days of futures, it's hard to liquidate the top 5, top 10 people over and over and over again, right? It does happen on occasion, extremely rarely. But typically when you liquidate a significant portion of volume or open interest, you very rarely see equal or greater highs in those liquidations on any spikes down in price. So that's definitely something to pay attention to. More of a social thing is obviously news. And when you see a bunch of people making easy money, which to me, the NFT stuff looks like right now. But when you see headlines like this, a bunch of people making easy money, you see a bunch of new market participants. This was in 2020 at the end of November. Nick Carter was saying his Uber driver asked him about Bitcoin. And I basically said, that's not good. But this was just the beginning of the bull run, right, for this most previous cycle. So it's important to put it all into context, because just because your Uber driver or taxi driver talks to you about crypto, or they're trading crypto while they're driving or whatever, doesn't mean it's necessarily at the top, right? Because we're early. If you're watching these videos, we're still early. If you're watching any of my content or reading it, you're definitely one of the earlier people. We live here. Everything looks stupid when you find out external stuff is happening. It's like, what? Tom Brady's talking about NFTs? What's going on? The Senate's hung up on the infrastructure bill based on crypto legislation. That sounds so bizarre to anybody who isn't living in the now relative to where crypto's come in the past 5 years. Even still, when I hear it on TV, like when I'm watching Bob's Burgers and they mention Bitcoin, I'm like, what? What did they just say? It's weird to us, I think, because we live here. And so I wouldn't get too spooked by this. We saw this in 2014 as well. You'll see this over and over and over again with new entrants, new market participants. But I think the bigger issue is when you see attempts to like glom on to blockchain or Bitcoin specifically for profit. This was December 2017. The Long Island iced tea blockchain company profits, or their shares went up on just changing a name. Kodak, very similar, Jan 2018, on just changing the name. And just speaking of Kodak, they have a history of just jumping to the flavor of the month between blockchain and drug manufacturing. I've lived in Rochester, so I know a little bit more about Eastman Kodak than probably most people, but it's funny to see that affect you directly when they're doing stuff like this. So that's definitely a be careful sign, right? This isn't, we're probably going to collapse tomorrow. This is all these late entrants are trying to make a quick buck. Never a good sign, And Ruffer talks about this when they got out of Bitcoin. So they got in April 2020, and then they got out in March 2021. And they cited various things here, all of which are social for the most part. Retail speculation, meme stonk mania, excessive leverage. This is liquidations in OI. That's what they're talking about here. Coinbase IPO, which is another probably secondary thing. But when you see, I think to many people, IPOs represent cashing out of a market. Coinbase IPO, Robinhood IPO, just IPOs and SPACs exploding in general. Tom Brady laser eyes. People who aren't known for their crypto stuff, right? All of a sudden saying we're on board. Doge, part of this meme stonk stuff. Elon Musk, obviously, SNL. And it's funny they talk about NFTs because those have continued, but these are mostly social things that represent overbought dynamics for certain. And again, CryptoKitties December 2017 to me gives me the same energy that Pet Rocks selling for $200,000 give me now. That this doesn't make me bullish. This says, okay, we're in a weird place here. Very clearly, things are in the mania euphoria stage for certain aspects of NFTs, and that has been ongoing from CryptoKitties even before that, to NBA Top Shots, to CryptoPunks, to people cornering the market. Easy money is very much in the conversation right now for this stuff. So if I were holding NFTs, I'd say I'd be looking at all this information, taking it in and thinking, okay, the social aspects of this have exploded, We have a ton of new entrants, new participants, celebrities, Mike Tyson, anybody who's anybody is talking about this stuff, right? That's a great sign for some continuation, but I would start to sell at this point, right? Tom Brady's launching NFTs on DraftKings. I mean, that's just buzzword bingo. Not meaning it won't be successful, but it's just very much flavor of the month type stuff that gives me caution, certainly. And this is the Shopify CEO talking about an Ethereum EIP, which again, to 2016 people who've been in this, that's nuts. But nowadays it's kind of like, okay, this doesn't represent euphoria mania as much as it is just stuff going mainstream more and more and more and more. So it's highly subjective, and you got to pay attention, pick your battles as to what you're considering part of your overbought, oversold picture. Here's OpenSea volume, and just like anything, my question is always, okay, what is next week gonna look like, right? Can volumes keep going, right? If you think that answer is yes, then the top isn't in. If you think the answer is no, then I would start selling into strength, right? This isn't just NFTs. This is just very topical, specific example right now. And we're seeing that in various other ways. Top shots are popping off, right? I don't trade NFTs directly. I don't own NFTs directly, but these are all things I'd be watching. Google Trends, something I talk about all the time, is a great way of also looking at overbought, oversold. When you see prices going higher on lower interest, that is a caution. But you got to be careful with that, because if the greater internet is being introduced to this topic or technology, it's unlikely that you're going to see continued new interest renewed over and over, right? But this was certainly a warning sign in March that this stuff probably needed to cool off, right? But if you look at the CryptoPunks now, this is at all-time highs. So again, it's like we're overbought, yes, but to what degree, right? I think it's pretty clear when you see CryptoPunks going for multiple millions. To most people, that's a bit silly. Not saying they can't be successful, not saying they're not worth that. I'm just saying, let's take a step back here. So the question is stuff like this towards the top more than it is towards the bottom, right? And we can look at CryptoKitties, obviously, with how that exploded and never really resurged past that. And then NBA Top Shots as well. It's unlikely that you see multiple upticks in all-time highs in Google Trends for certain things, but seeing market caps 2x with Google Trends muted like this gives me caution. That's a type of a divergence all on its own. How much of this is manipulated? Is new money really in this? What's going on here, right? Another way to quantify overbought, oversold using on-chain activity would be to look at something like MVRV, which is market cap versus on-chain activity. For most coins, an MVRV around 2x, meaning the market cap is 2 times the on-chain activity, that has been a top, or at least close to the top, most of the time. Sometimes it goes lower, sometimes it goes higher. In Bitcoin's case, it's been as much as 4x or higher. But over time, this has continued to decline. Even here in 2017, sorry, this is ETH in 2017, you get this echo bubble, this higher high on less MVRV. It's still telling you we're still above 2x, right? But be careful. The same thing with the downside for oversold conditions. This is based on back testing. So historically, for most coins below 1, things get oversold, and below 0.5, things get into the, all right, let's start to rotate into this territory. So ETH is currently at 1.7, which is problematic for me for ultra mega uber continuation, because unless on-chain activity picks up significantly, then MVRV is going to continue to increase if price goes up. If we look at BTC, again, same thing. We have cruised at 4, 5, 6 several times. In 2017, we got to 3.6. Most recently, we got to 2.8. Currently, we're at 1.6. Bottoms have been sub 1 and as low as kind of 0.6, 0.7, 0.5. Anything down there is a good buy zone. But again, this is another way to establish non-subjectively, based on on-chain activity, overbought, oversold. So on any higher highs here, I'm looking to this as part of everything else, thinking, okay, is MVRV above 3? Because that's, uncharted territory since 2018, right? And in reality, most TA, whether people realize it or not, is a direct measure of overbought, oversold conditions. You can use something like simple pitchfork to just look at rate of change to establish a trend channel. The bottom, you get oversold. The top, you get overbought. And the longer this trend channel exists, the higher the likelihood that those levels are going to hold. For this specific case, since 2015, you know, we went way overbought. This mega ultra bubble territory, we went kind of oversold underneath. And most recently, we tapped this a couple times at the top. Currently, we're below. Much like S2F, you know, this is another overbought, oversold mechanic. Something else you can use is moving averages, the 2-year MA multiplier. Again, I talk about this all the time. These are high time frame oscillators you can use for overbought, oversold, but also help with a sanity check. You know, your Uber driver's talking about Bitcoin, asking you about OpenSea, how to use MetaMask, right? What does this look like? You know, are we in the red or are we in the green? Most likely we're closer to the red than the green. Just pairing that with social stuff. The cloud as well has this TKC clamp I talk about frequently. If this expands, you see this TK disequilibrium. It says the likelihood of lower lows is less and less. Same thing with here, the likelihood of higher highs is less and less. And eventually we mean revert, as we did here. It doesn't mean this will automatically bounce. It doesn't mean we won't go lower. It just means probability, again, sliding scale. We're talking here mean reversion more likely. And we saw that in 2018 as well. You see this on any coin, any chart, any stock, anything. Even in May 2019, you know, this thing mean reverted back to this level. So mean reversion is also very much related to overbought, oversold. And just simple, you know, what does this look like since the past 20 days, right? Let's look at ETH in the past 20 days. What is the probability that this thing has a 13th, a 14th, a 15th, a 16th green candle? I don't know. We could quantify that. We could look at backtesting. How many times has this happened for ETH where 2-day candles are green 15 times in a row, right? 16 times in a row. The TD9 indicator also uses this dynamic to figure out, okay, how overbought are we? How likely are we to reverse at this point in time? So this is extremely rare, and this gives me pause for ETH, right? Now that doesn't mean this is going to collapse, doesn't mean it's going to go to zero, doesn't mean it's going to start a bear trend. It just means we are getting increasingly overbought, despite, you know, we were mega oversold really, and now we're getting mega overbought very quickly. And if you look at these on backtesting, historically, we just, after this tops, we do get just a mega dump. Even leading into Corona March 2020, chart looked very similar to this. Not saying we're going to see a mega dump, but the conditions are ripe. We are in a crowded trade. We are probably over leveraged, we being crypto. And sooner rather than later, this thing's going to have a path of least resistance. It's going to be down rather than up. Maybe it's a spike, maybe it's a small move, but eventually this has to slow down, right? And I talked about divergences already in another video for BNC. You can check that out to learn more about divergences, but using RSI or any oscillator is another great way to look for imbalances in overbought, oversold conditions. And the chart is kind of irrelevant, ideally, because ideally the technicals will lead the way. If you see lower lows on less volume, if you see lower lows on lower momentum, which is what RSI is measuring, then it's more likely than not that this thing will reverse sooner or later. Then you can pop on high time frame MAs, talk about mean reversion, that sort of thing. Ideally, on any of these charts, you're seeing this on backtesting as well. Here we saw lower lows on equivalent RSI. Eventually that did mean revert. Just another way to quantify this. And something as simple as a mean reversion moving average type scenario, you know, if we get way overbought beyond the 200-day moving average, historically for BTC, that has been a good indicator. And just thinking about these CryptoPunks and NFTs, you know, their 200-day moving average certainly is not anywhere close to the nearest level of price that they're being sold for. So a lot of this is social, but can be quantified using open interest, liquidations, leverage, Google Trends, MVRV. Most technical analysis will tell you if things are overbought or oversold, and you can just move up or down the timeframes if you are trading on higher leverage, for example. Lastly, I'll just mention the ETH-BTC fund. I trade for Techemy Capital on Enzyme.finance along with the DeFi portfolio, non-custodial portfolio management tools so you can send ETH or USDC or just watch what I'm doing. You can see AUM, allocations, performance, all the tokens I'm in here, all the fun I get into in DeFi lending and borrowing, all the trades I make, when, where, how much, as well as deposits and withdrawals. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.